Hello, Sean Innings here. Welcome to the Microcap Club Member Spotlight. In these interviews, we'll showcase many of the talented members on Microcap Club. And today we have Jason Hirschman of Hudson 215 Capital. Jason, thanks for joining.
Happy to be here.
So, Jason, can you tell us a little bit about your background?
Sure. My name is Jason Hirschman, and I'm a full-time investor running a family office called Hudson 215 Capital. I participate in Microcap Club as a track and have been investing since the late 1990s. Up until a couple of years ago, I was your classic combination of small businessman by day and investor by night. And working in a family business provided me firsthand experience with everything from inventory management, sales, marketing, human resources, product development, patent litigation, both as a plaintiff and defendant, capital allocation, tech support, and even on occasion, janitorial services, which is all good stuff for a microcap investor with a fundamentals bent.
And so when were you really roped into the family business? Was it something like you've been doing since you were 10 years old, or was it something more recent, like after going to college and stuff like that?
Well, I always worked during the summer. Once I reached a certain legal age for the family business, perhaps even before that, but a certain legal age, earning minimum wage at first, but then a little bit higher, fortunately. After I graduated college, I did some management consulting, like you're supposed to do, coming from if you graduate from a good college, university, you do your management consulting bit. But honestly, I really enjoyed the entrepreneurial spirit of a small business. I enjoyed working with my family. I had some ideas for the business. And so in 1996, at the tender age of 23 or 24, I rejoined it.
Gotcha. And was there anything really you learned from like your family in terms of how to operate a business and maybe what that helped you or taught you for like investing?
Yeah, I mean, I think there's a lot of different lessons. Of course, there's a practical experience of all the things that I mentioned, everything from inventory management to tech support, for example, that you do as a small businessman. But I think one of the major differences between being a businessman and being an investor is that investors always start off with a allocation of 0% to a stock, right? While if you're a small business, you're 100% dedicated to something. Maybe 100% of your life's worth is in something, and then over time you go down, right? And you also run into situations where there's a lot of ups and downs, right? A lot of sleepless nights. And so there's a degree of volatility and, say, insecurity that comes with being a small businessman that I think that a lot of investors aren't used to, who just have a diversified portfolio. So those are two things that really helped out, in my transition from small business person to investor.
And can you talk a little bit more about that transition from small business owner to the investing and
Yeah,
how you kind of
sure. I've been doing the family business since like 1995, and quite frankly, was able to sort of balance being a business person and investor for a number of years. But one, as our assets start growing, right, and getting more significant, you just need to put more time into that, and so it's difficult to balance both of them. But secondly, and this just happens to a lot of small business people, is that there's changes in the industry that some are positive and some are negative, and some occurred which were negative in our industry. We had one player that, quite frankly, purchased a number of our customers, and not just our customers, but basically consolidated the industry to the extent that instead of having 10 customers that accounted for 50% of our business, it was one customer. And then this large customer, I say in the past couple of years before I left, I started bringing some like ex-Amazon people and really started changing the relationship they had with suppliers. I remember one conversation I had with this whoever I was dealing with at that period of time, and they kept emailing me and referring to me as like a team member, right? So basically, then we got into a conversation. I said, it's about some business issues, and said, look, I mentioned, you can call me Jason, right? team member is a little impersonal here. And that individual, who's an ex-Amazon employee, he says, look, I don't have to remember your name. You're just a team member, right? And you don't even have to remember my name. You just have to remember my company's name. And that's everything and the only thing that's important. So the relationship was changing in the industry. We were still making, decent money. But, at some point, and this is the advantages of having, a substantial portfolio is, right, everybody talks about certain, certain amounts of money that you can tell people to go do something, right? And clearly had reached that point. And it's kind of like Munger, you like, if at some point you're like, this is not what I want to do with the rest of my life. This is not, it's sort of a miserable existence to continue on going down this line. So no, became a full-time investor, sold the business, and have been so for the past 2 years or so.
Very nice. And can you talk about how you got into microcaps?
Sure. And actually, there's I'll do a little plug for MicroCap Club. There's a thread called "What have been your mistakes of omission?" which frankly should get a little bit more love on MicroCap Club. And back in the early 2000s, right after the market had really gone down, I think late 2002 or so, I had started investing in a number of asset management firms, publicly traded asset management firms. The Eaton Vances of the world. There was Legg Mason, there was T. Price, those kinds of firms. There was also a tiny little, I think it was like $5 or $6 million market cap company called Diamond Hill back then, which is a much larger entity. And I bought some shares. I think I actually wrote this up on the thread I referenced, but I thought about 13,500 shares at the time at $384. And I just checked it a little bit earlier today, and it was actually at $168 a share now, right? Which is fantastic if I held on, right? But I didn't, right? I actually had sold my shares after it gone up a certain amount because I wanted to pay down my mortgage. I wanted to get, do a few other things. It was ridiculous. And obviously I should have re-entered at some point in time, but, much more younger, inexperienced investor, seeing something, always waiting for it to come back down closer to your cost basis, or even, somewhat close to your cost basis, or 2 times your cost basis, or 3 times your cost basis, and you just watch it run away. What's funny is that I put in initially about $60,000 into Diamond Hill at the time. Right. And I posted on the thread in September 2015 about Diamond Hill. Since then alone in dividends, it's paid out $1,129,500. I would have received, since I wrote that post on the thread in 2015 on my $50,000 investment, right? Right. So you all investors go through these oh my God errors. And in fact, I even said, hopefully I'll have another opportunity to invest in something, and this time I'll hold on to it. And those are the lessons you have to learn, right? You have to learn that when you do get that chance to find the great company, you have to stay in it.
Right. And hold on for dear life.
And hold on. Yeah, because honestly, right? I mean, and obviously this is sort of a reference to Expel, which I have like a large position in. But there's a lot of people like, we all like to say, oh, we're doing something special. We're doing something unique, right? But a lot of us, frankly, we're all variations of the same investment approach. Right. A long short fund, or just long, in the microcap space. There's a number of other people in the microcap space or small cap space. In fact, we tend to even own the same companies at times, but we get very different results because those companies at different times, and we hold them for different lengths of time, right? Which sometimes can make all the difference in the world in terms of returns. So that's if you had to point to say someone asked me, what's my investing superpower? It's just holding on to the right companies for the right period of time.
Right. That's definitely a superpower that all of us could work on if that's your style and personality of being.
Sure. And there's a variety of different ways of making money. So I don't want to say that mine is the only way, but it's a pretty damn good way.
So could you get a little bit more nuanced on your investing strategy for those who are unfamiliar with you?
Sure. And there's a few throwaway lines that I like to give. Like, I like to find microcaps that can turn into small caps. Now, what does that really mean? That means, for me, is identifying a company that probably there's something special to it. Probably some qualitative factor, probably not a quantitative factor, because if it's special in a quantitative way, it probably will be picked up by some screen. But there's some qualitative factors that aren't fully appreciated, that under the current size of the company, the current situation, probably don't produce a great return on invested capital. But over time, as this company grows, as management gets to hopefully have more resources and put them to use smartly, this is going to be a very high return on invested capital company and a very durable company. Right. So that in a nutshell, it's one of those, it's very simple to say, not so easy to do. And it's just a question of hopefully finding, one of those companies every other year, every few years, that can really make the difference for me in my portfolio. And I tend to run a fairly, what people call a super concentrated book, and tend to, today's top 5 will be tomorrow's top 5, and the next year's top 5. That being said, just because I run a super concentrated book, I tend to buy like 40, 50 new stocks a year. Mm-hmm. It's just, less than 25% of those new stocks gets past 25 basis points, 1 in 10 maybe, or 1 in 20 gets past 200 basis points, because it's really tough to find something special. And I really don't want to fill my portfolio with too much mediocre stuff.
Right. Very good. So I think that really gives us a great idea of, who you are, Jason, and your investing style. One other thing that I think would be a good ask or question for people on this interview series would be, like, what has MicroCap Club provided to you, and what are some things that you think are, great kind of value add that the community has had with yourself?
It's been crucial, not only to myself, but my family's well-being. And so I'm very thankful to both the community and to Ian and yourself and anyone else who participates and leads the community. And so, what I would say to everybody is that, particularly people who are say newer to the community, is that there's a tendency that all investors have to think like their ideas are special, right? Their thoughts are special, right? And even though you shared like your submission, don't be afraid to post new things. Don't be afraid to reply back to a thread, even if it's not agreeing with somebody else. I find those kinds of give and takes so helpful. And I always find also when people reach out privately with questions or want to have calls and things like that, I think it's a fantastic community, not only for learning more about stocks, but learning more about different investment styles, and also just meeting new people who turn into friends. It's amazing how many friends I've made through MicroCap Club. It's the friends with financial benefits network, really.
Awesome. Well, on that note, I want to thank Jason again for chatting with us today. And where can we find you at in terms of your handle for MicroCap Club and Twitter?
It's 8-track with the, not just the number 8, but just the letters 8-track. You should be able to find me. You can also find me, I think it's 8-track 180 on Twitter. Those are probably the 2 best methods of reaching out to me.
Awesome. Thanks again, Jason.
Well, thank you, Sean. Really appreciate it.